talking about the top 5 hacks to reduce your mortgage and save you thousands. Hack number 1, make one extra mortgage payment a year. It sounds daunting, right? To come up with the money to make one extra payment every year. But here's a few ideas for you. Idea number 1, take any and extra surprise or bonus money that comes into your life, open up a savings account and put that money into that savings account. So whether that's you get a bonus from your job, you get a birthday card from grandma with $50 in it, any extra money that comes into your life, put it into that savings account. And at the end of the year, apply that toward the principal on your loan. Or if you are the type of employee who gets paid bi-weekly, like every other Friday, something like that, when you get paid, take half of your mortgage payment and put that into that savings account. So at the end of the year, you will have made 26 half payments. Now have your mortgage deduct automatically from that savings account 12 times a year. And at the end of the year, you'll have one extra payment left in that account. So you will have made half payments every time you got paid, and you'll end the year with a 13th payment that you can then apply directly toward your principal. Another option might be if you have a cashback credit card, take that cash back and apply that toward the principal on your loan. You're just trying to reduce the principal as quickly as you can, because as the principal reduces, such does the interest that you pay on it. And that's going to save you years off of your mortgage and hundreds of thousands of dollars potentially. Hack number 2, pay bi-monthly instead of monthly. You got to check with your lender to see if this is possible. Some lenders will allow you to actually make bi-monthly payments on your mortgage. You pay half on the 14th, and then you pay the rest on the 1st of the month. This is awesome because it actually applies to the principal quicker and cuts the interest that you pay down faster. You'll save years off of your mortgage and thousands of dollars. Hack number 3, remove your PMI. PMI, or private mortgage insurance, is required on any conventional loan where you have made a down payment lower than 20% of the value of the property. So if you put down 5% on your mortgage, then you're probably paying into PMI. Now you can remove PMI if you can prove to your lender that you now have at least 20% equity in the property. How you would do that is that you would contact your lender, tell them that you think you have reached that number. They will then schedule an appraisal and be able to confirm whether or not that's true. If you're curious about whether or not you have hit that 20%, I am more than happy to give you my own personal opinion on what the property is worth. The fact of the matter is, property values have inflated in this market in the last couple of years, and it's very possible that you actually have more value than you thought you did, and certainly more than the bank thought you did. Hack 4, rate buy downs. So this hack and the next hack are really both geared more toward new buyers in the market right now. Rate buy downs that's a terminology you may have heard a lot lately in the market because it's happening everywhere. You might have heard 3-2-1 buy down or 2-1 buy down. And basically what that means is that you as the buyer are able to buy discount points to lower the interest rate on your mortgage. A 3-2-1 would lower your rate 3 points in the first year, 2 points in the second year, and 1 point in the third year. What is a point? A point is traditionally about 0.25% of the interest rate, and it costs about 1% of the purchase price to buy a point. So if you're buying a $300,000 house, 1 point would cost about $3,000. Now here's the kicker is that you as the buyer can ask the seller to buy points down for you. So that in essence saves you money over the cost of the loan, and that's paid up front by the sellers. If you end up with a rate buy down, then that maybe gives you 3 years to watch the market. And if at any time mortgage rates dropped lower than the rate you were paying, you could refinance at that time. So that's a great hack. Hack number 5 is to buy an investment property and live in that investment property. In the state of Kentucky, you can actually use a residential mortgage to buy a property that comprises up to 4 units. So you could buy a duplex, a triplex, or a quad, and you can actually live in one of those units and rent the other units out to tenants. Those tenants then in turn are paying your mortgage for you and even contributing to your utility costs. That one is a great hack. So to recap, our 5 mortgage hacks are: number 1, make an extra payment each year. Number 2, make your payments bi-monthly. Number 3, remove your PMI as soon as you possibly can. Number 4, rate buy downs. And number 5, live in your investment property. So for me, my favorite one of these is absolutely, as a homeowner, the bi-monthly payment option, because it doesn't cost you anything. You just pay your first payment on the 14th or the 15th of the month, and then you pay the rest of it on the first of the month when the mortgage is due. And you're not paying extra, you're just splitting it in half. And sometimes, let's be honest, that big chunk is easier to stomach when you're splitting it in half. So you're paying the exact same amount, and you're just taking advantage of the way that interest is accrued over time. And I just think that's the best hack. Banks don't really want you to know that, and not every bank allows it. With all of these hacks, make sure that you check with your lender to see what's possible. And with all loans, there may be early payoff requirements or early payoff conditions that have to be met. If you do end up in a situation where you're going to be paying it off early, make sure you know what the restrictions are around that. For more content like this, more hacks to save you money, make sure you like and subscribe to our channel.